The implications of events in the Middle East for the U.S. economy are uncertain. In the near term, higher energy prices will push up overall inflation, but it is too soon to know the scope and duration of the potential effects on the economy. We will continue to monitor the risks to both sides of our mandate.
Well, that uncertain war outlook from the U.S. Federal Reserve pushed down equities on Wall Street. And for analysis on the central bank's policy path, I'm joined by David Wessel, Director, Hushkin's Center on Fiscal and Monetary Policy at the Brookings Institution. David, thanks for your time today. So the Fed sticking with plans for a rate cut this year, despite raising its headline inflation forecast to 2.7%. Oil prices are continuing to spike. Is that a credibility risk on inflation? And we also heard Powell say a few times that nobody knows what the ultimate economic effects of the Middle East war is going to be. How unusual is that kind of uncertainty?
Well, the Fed is always talking about things being uncertain. I keep waiting for one of the Fed chairs to one day declare that something is certain, and I haven't been there yet. But I think the problem that the Fed has now is that they don't know how long the war in Iran is going to go on. And if oil prices remain elevated for a long time, that hurts them on the inflation side because it'll raise prices, but it also hurts them on the growth side because it'll slow the U.S. economy. So they're kind of stuck where they are. You're right that the projections that the Fed officials made did suggest that most of them want another rate cut this year, but not all of them. And Jay Powell, the Fed chair, made quite clear that he didn't put much faith in those projections because there's so much uncertainty.
Yeah, David, and I suppose what the Fed is possibly more certain about is the labor situation, because they seem to be acting on that, which is to prioritize the labor market, which recorded 92,000 jobs lost last month. Right now, why does that seem like a bigger concern? I mean, do you see signs that the U.S. economy is slowing perhaps more sharply than the Fed expects?
I don't think that's clear yet. I mean, you're right. We had a bad loss of jobs in February. It had more job increase in January. And the Fed chair made the point that if you average them, plus it's very hard to read the number of jobs added in the U.S. at the moment because we've decreased the amount of immigration so much. The unemployment rate, which is something very important to the Fed, has inched up a bit. So I think that their problem is they see risks to both sides here, but they also know that they told the public and the markets and the world that their target for inflation is 2%. And they have not been close to that for quite a while. And things do not seem to be going in the right direction. So what they're concerned about is people begin to think that they're never going to get to 2%. Then they'll assume that we're going to have more inflation and they want to avoid that outcome. So it's really pretty tough call right now. And I think what they're saying is could go one way, could go the other. So we're just going to sit tight for a while.
Yeah, and, you know, another piece of uncertainty there, or certainty, depends on how you want to look at it, is Jerome Powell saying that he doesn't intend to leave the Fed board until the DOJ's probe into that headquarters renovation thing is, quote, over with done with transparency and finality. I mean, potentially staying as governor as well until 2028. How do you see this affecting the transition of power when Jerome Powell's term as chair ends in May?
So Jerome Powell's term ends in May, and Kevin Warsh will replace him only if the Senate votes to confirm him. And a number of senators, Republican senators, have made clear that they're not going to vote to confirm Jay Powell as long as this Justice Department investigation is continuing. And I'm surprised that the Justice Department hasn't dropped the investigation. They got a very adverse ruling from a federal judge last week. And I keep waiting for the president or the attorney general to put pressure on the U.S. attorney for the District of Columbia to let's get this over with. So what do I expect will happen? I expect Jay Powell will be chair beyond his May 15th term for a while longer. And I think it's not at all clear whether he will stay as a board of governors until January 28 when his term expires. And he's being very careful not to send any signal one way or the other so that he has maximum leverage with the White House.
All right. And David, you know, the BOJ is also going to announce its monetary policy decision today, where it's expected to hold 0.75%. How does the BOJ's position differ from the Fed? And also, with U.S. rates staying mildly restricted, then the interest rate differential will continue to hit the yen. At what point does this become unsustainable? And do you expect anything to come out of PM Sanai Takaichi's meeting with Donald Trump on this front?
Well, those are two very different questions. I think the Bank of Japan is sitting there saying the economy in Japan has been pretty strong. Inflation has been moving up finally. And so they're ready to begin to continue raising interest rates. I don't think it was expected to do it at this meeting, but maybe they would do it in April. But the oil price shock is a real problem for them. The U.S. is a net oil exporter. Oil prices hit us, but not, and it hits some people very hard. But in Japan is a net oil importer. So the Bank of Japan has to worry that this might, if this continues, high oil prices, it might be a real downward pressure on the Japanese growth rate. They don't want to see that. So I think they're they're going to be also be in a wait and see mood. But while the Fed's wait and see mood is, we'll probably cut, the BOJ is going to increase, but this has put a real stick into that plan. I doubt that the Japanese prime minister and the president will talk much about monetary policy. I certainly hope not. I think that it's important that the central banks have independence to set rates. I think that the conversation between the president and the prime minister will be about trade and about the president's eagerness to have our allies, the ones he's been criticizing for the last year, join him in the campaign against Iran. And so he'll be looking for some kind of Japanese support for that, even if the Japanese don't have a military that can participate.
All right, David, we thank you for your time today. David Wessel, the Director, Atkins Center on Fiscal and Monetary Policy at the Brookings Institution.